I think let's just get a sense of trends in Africa in terms of what we're seeing by way of commercial, residential, industrial and retail property rentals, building projects, people moving into the cities and demanding property.
Sure. Hi Loretta, thanks. It's good to be here. I think, as you mentioned, we'd done a study on the property market in several jurisdictions outside of South Africa, and the one clear trend that we saw was exactly as you had mentioned, this great supply-demand imbalance in many jurisdictions. One really needs to go and visit these countries to understand the full extent of that, and it's probably best evident, I guess, in the types of rentals and the rental profiles that one sees in these jurisdictions, which, to be frank, are enough to make both landlord and tenants' eyes water, albeit for different reasons.
I mean, obviously, with urbanization and population growth, we are now seeing a burgeoning middle class, bona fide, about 160 million people earning above 5,000 US dollars per annum. What has that meant for real estate?
I think that's significant. It's interesting. We are involved in raising capital for a fund that we're invested in, and what's been very interesting to see is the response from international fund managers with regards to that theme. So a lot of these guys have got a desire to get into emerging markets, Africa specifically, and with regards to the African story, a lot of that desire stems from their belief that there is this burgeoning middle class, increasing levels of consumerism, and certainly specific to what we're going through at the moment. One is looking at them positioning themselves as landlords really to take advantage of.
But there are a few discrepancies, and I'll just give you an example of Nigeria, for instance, which is lauded as the one market where you're seeing this consumer class coming to the fore, but it hasn't translated into dynamic investments in real estate. What are the problems there? Is it mortgage financing from the banks? Because property comes at a premium in Nigeria.
Sure. I think that's a very good question, and maybe the point to make on that is that if one looks at existing buildings that are income producing already, you can see the strength of the market in those. They trade at yields that are surprisingly low, implying higher value for those properties. If one looks at the development aspects, in other words, introduction of new stock onto the market, it is difficult. Development in property development in developed markets is a difficult enough game. When you add the complexities that one's confronted with in emerging markets, coupled with difficulty in terms of getting access to capital, it does increase the problem to a certain extent.
In Kenya, it's a situation of supply and demand. The demand outstrips supply. Over 150,000 units required per annum. It can only provide about 35,000. How do you explain that?
I think that you've referenced the Kenyan residential market specifically, but
yes,
that story is true regardless of the country that you're looking at, regardless of the sub-asset class that you're looking at in the property market. I think for a number of years there's been underinvestment in real estate across the board in sub-Saharan Africa. It comes back to what I was saying earlier. It's difficult to develop these projects.
Right.
Infrastructure lags to a certain extent. Access to capital and expertise has been scarce. I think the good news is that if one does have capital in the form of equity capital and appropriate expertise, one's ability to access the necessary debt funding increases and tends to resolve that situation somewhat.
Obviously, with Africa growing now consistently over the last 7 years or so, we're seeing a lot more FDI coming into the African economies. I think the figure was about 80% in general,
Sure.
being an increase in the last year. So investors are coming in, they're setting up shop in Africa. How has that impacted the commercial property space? Because in South Africa, we know that because of the recession, rentals and occupancies have been very, very low. Is that the case in the rest of the continent?
I think to answer the first part of your question, like I'd said, interest or appetite from foreign investors for the asset class, certainly in our estimation, has been on the increase. To deal with the second part of your question as to how has the recession affected the property market in these countries, I think it is noteworthy that because of this demand-supply imbalance that we see, that the effect has been relatively minimal. Vacancies remain low. rental levels are amongst the highest that one will find globally. So it has been fairly resilient.
Right. And talking about foreign investors have been interested in it as an asset class. Comparatively speaking, how does property compare to equities in general? I mean, before the recession, we were hearing figures like 13% returns, which was higher than what you're going to get by investing in any of the JSE All Share Index components. What's the picture like today across Africa?
It's perhaps a little difficult to compare apples with apples in that regard. You know, in South Africa, we've got a very well-developed listed sector, the property loan stock and unit trust sector, or the international equivalent of the REIT space. In many African jurisdictions, we're not quite there yet with regards to income-producing properties. What I can say, you know, the area that we've been specifically active in is looking at the development front, and the kind of IRRs that we're forecasting out of there, which are around about 30%, north of 30% in dollar returns, you know, indicate that that it is a major growth area and the future looks bright.